Hey, Mike.
Thank you. What's the spec sheet on this thing? Can you give me a rundown?
Payload's what, 11?
It's easily 10 up to 16 kilos. Yeah, about 30 kilo takeoff weight.
And what's the range? Forever.
Line of sight.
Yeah.
So legally.
Yeah.
I mean, if you turn the metal lines, we take the quadcopter version of this. I just came back from the project and we got 22 kilometers in one flight.
Nice.
Over 40 minutes.
Yeah, excellent, eh?
Yeah, topping out in ideal terrain, ideal conditions, around 50 minutes.
Yeah, okay. Yeah. How much does, cold weather, Canadian Shield, wintertime, how much does it impact battery life?
It's really hard to tell. There's a lot of factors, right? Like how new are the batteries?
Yeah.
There's like kind of because as it gets colder, it uses a lot less power to stay up. The air is denser, right? So it's like we haven't noticed a huge dip. Like I was just 2 weeks ago, I was flying our quad rotor in minus 30, and I got 42 minutes of flight time.
Yeah, okay, not bad, eh?
The cold really doesn't seem to bother it that much.
Oh, excellent.
There's also little tweaks you can do with like insulating the batteries and making your homemade insulation.
Yeah, okay.
That helps you.
Yeah.
There's lots of different tools and tricks of the trade, I'll say.
11 kilos, is that what you said?
Yeah, 10 easily.
Yeah, okay,
up
cool.
to 16. Yeah, with this guy, this is our octocopter. It's the heavy lift.
So what does this run you if I was going to pull up my checkbook right now?
I heard 40.
This one, yeah, some in the neighborhood of, I don't know, we're partnered with the manufacturers. I don't know what the retail is.
Yeah.
But yeah, probably going to be right around between, depending on the quad or the Octa, 20 to 40.
Yeah, okay.
US.
It's the future, man. It's the future. I've got a little, like a retail DJI thing, right? And even just going up on site with it and the Geos up there love it. They don't have to leave the friggin' shack, right?
Yeah.
They can go, right? Yeah, no, these things are the future, absolutely. Yeah. Helicopters are so friggin' expensive, right?
Well, expensive, and there's a lot of limitations, but then we can fly a lot closer to cover.
Yeah.
And it's obviously a lot more accurate. We can fly RTK, sub-meter accuracy.
Sure, right, absolutely.
So tighter line spacings, everything.
Yeah, okay. And so what's the make and model of this bad boy? What's it called?
This is made by Black Square.
Okay.
They're U.S. expats. They're in Colombia now.
Okay, cool.
So that's all that we have 2 models on there. As well.
Oh, awesome. Cool. Okay, well, thanks, guys.
Yeah, no problem.
Cheers.
Yeah, I mean, I think for us, there's a lot of upside in 2025. As you know, we kicked off the PFS earlier this year. That's very much still on track for Q4. I don't see any material changes from the PEA that we put out in September. So, fantastic project economics, great production profile. I think you'll see that continue through into the PFS. And then really the other main milestone for us this year is beginning the permitting process. So that'd be great to get on that track and kick that process off. And then additionally, we're going to be doing a pretty significant drill program this year on our ranch project. The reward of that is we're going to be testing a whole range of new exploration targets, trying to make additional discoveries, growing that high-grade gold footprint at surface. And then we'll probably drill a few deeper holes at ranch as well, test that porphyry potential. I'm sure you might get into that with Evan, but I'll leave that in his wheelhouse. And then, so that's the three things I'd say that's the upside for Thesis this year. And then in terms of risk, I guess risk for us is really permitting. And it doesn't matter who I'm talking to, whether it's people like yourself or other companies, the one question is always kind of like, well, great, you're going to begin permitting. What does that process look like? How long is it going to take? And in Canada, it's been pretty variable and arguably way too long. And honestly, I'm going to try and turn this risk into a bit of a positive here, but David Eby, the Premier of BC, came out recently and said, we're going to start to expedite the key projects through the EIA process. And from what I've heard, that's already underway. They're starting to move elements of the EIA around for individual projects to kind of expedite them through. So huge positive for us. We're working very closely with our member nations on this as well to make sure that everybody's aligned. So ultimately, I'm confident that we can move this through quickly. We have a very simple design as well. And then the PFS should be out, as I said, Q4. I think that as I said, using 1930 gold and 24 silver in the PEA that we put out in September, it's really conservative commodity prices. The after-tax NPV was 1.3 billion, 35% IRR with a 2-year payback, so incredibly positive numbers with great production profile at 14 years, 215,000 ounces gold equivalent a year. And actually, to kind of emphasize that point, that breaks down about 165,000 ounces of gold and then 4 million ounces of silver. So if we went into production today, we'd be the biggest silver producer in Canada and the 5th biggest in North America. To give you a sense of how many silver ounces we have, it's about a quarter of the value of the project. So great project economics. Given where we are with spot prices for gold and silver today, I don't really see that changing in the rest of this year. I think that's only going to improve. So the PFS should look very similar to the PEA, hopefully with even better economics. And then permitting will be well underway, and we'll be looking forward to a bright 2026.
So I started off in government and then moved to industry. And then I was pretty frustrated in that activity because I wasn't aware of all the tools that I could use for exploration, and so I was seeking more knowledge and ways to update how I can look at these different systems. And so I caught wind of the Center of Excellence of Ore Deposits at University of Tasmania. I applied there, did a PhD with David Cook and Anthony Harris, who's now the Chief Geoscientist of Newmont. Did a PhD on the porphyry systems of Fiji. After I was done there, I was hired as the Australian Research Council's, I had an ARC fellowship in ore deposit. I forget what the name of this thing was, sorry. An Australian Research Council fellowship in ore deposit footprints. Okay. And then so I taught at the university for 5 years, and then after I did in there, I was doing research on the lithocap environment and the green rock environment, and so those are just different places within the porphyry environment. In the lithocap environment, that's where you put high sulfidation epithermal deposits. They typically sit above a porphyry, and then the green rock environment surrounds a porphyry, so it's your way to vector towards ore, towards the potassic center. And so that's where I spent about 5 years doing research, and then I wanted to get into AI and using machine learning and so other different techniques to be able to look for ore deposits. So I took a job with the BC Geological Survey where I was doing the mineral potential modeling for BC, and so there I did the method development for how we were going to do mineral potential modeling for porphyry, VMS, and magmatic nickel deposits. And then after that, for the BC Geological Survey, I became the senior economic geologist, and I started a project on critical minerals in different ore systems within BC. And since my bread and butter was porphyry epithermal, that's where I started. And so I was looking at critical minerals in BC, and that's what attracted me first to the Tudagun region. I was looking for examples of the best mineral systems I could find within those regions that span those different ages, and so the Lawyers Ranch one really stood out to me as a potential deposit to look at to see if we can figure out what the different critical mineral profiles are in these different systems. And so that's what really brought me there in the first place. And what I soon was able to discover is, you know, Ranch is a treasure trove of different critical minerals. It has bismuth and antimony on top of its, you know, its gold, copper, and silver profile. So that's what first brought me into the area. And when I arrived there, I was really impressed with the infrastructure. I was also very impressed with their commitment to the environment and to social strategies. And the other thing that was apparent to me was that even though there was a 4 million ounce gold equivalent deposit that's measured and indicated, there was just so much blue sky potential in the area for further exploration. And not only for the low sulfidation epithermal like what we see at Lawyers, but also for the high sulfidation epithermal that we see at Ranch and the connecting porphyry system. We have 30 targets that span both of those projects, and there's a whole bunch of different angles that we can throw at our exploration campaign this year. And so some of them is going to be high sulfidation epithermal, some of them could be low sulfidation epithermal, and then there's, you know, poke through the lithocap and see if we can discover porphyry as well. But sort of it's the focus will be around those epithermal style deposits with maybe looking through a lens of porphyry exploration while we do that. So usually I would have a small project. So when I was in academia, we would just go in and be able to work on one cross section with a limited amount of money. But now I really have the chance to sink my teeth into one particular location. And so that has me excited at the moment to follow through on concepts and ideas that we're able to develop.
Largely driven by snowline. Golden Triangle's next. But Guyana stands out globally. The Guyana Shield as #1. Okay, so it's a great proxy. I know some of the seniors use that type of filter. They got 100 gram meter intercepts, they did 400. I learned that from a new one. So first of all, some of the main takeaways. We'll start with Colin and come this way.
Yeah, I think a big takeaway was from very the beginning, actually having the government here and speak to what the future looks like in terms of mineral rights agreements and moving forward with new overarching bodies that can manage mineral exploration, mining, etc. I think that's really great to see, and seeing movement on that, seeing people talk about it is encouraging. After that, I mean, my big takeaway is just exactly this: how full this room is. It's when I first started this with founders Argentina a couple of years ago, didn't often find that everyone knew exactly where Suriname was, and I find I have more and more conversations these days. Actually, I rarely have a conversation these days where people don't know, and that's really amazing over such a short period of time for it to be such a much better known place.
Good, very good. Justin?
Yeah, and very similar. I mean, it's wonderful to see such a packed room here. We've obviously spent the last few years with Greenheart really trying to put Guyana on the map in our project local west there. So it's great to see that now spilling over and seeing the same kind of attention being paid to Suriname. It's great to see that represents the government here. And it's wonderful to have you partake in this and also see the kind of attention that the investment side is paid to the country. So we're very excited to be operating in Suriname. We think it's a wonderful jurisdiction to go, and I hope that everybody here is attending this starts to get that feeling as well.
Okay, yeah.
Yeah, I agree. I think we, as explorers, feel very welcome in the country, and there are windows of opportunity in different regions of the world at different times, and I think Suriname is entering, and investors into Suriname are entering one of those windows of opportunity now to really take a leap at developing the country's natural resources. So I think we can all be really excited about that.
Really great to have that technical background and then also the history that experience is really important. Lastly, it's really, I can't claim too much credit. It's been really my team, so Katie and Pascal here, that have done the lion's share of any work or all the work putting this together and really making it a success as it really has been. So thank you very much.
As we've put this historic deposit back together again, we realized that everything is vertically controlled. Historically, they were drilling vertical holes, and so the deposit was essentially misunderstood. And the message I've been trying to send to people that have dropped by the booth is that we're now in a position of scale. We can expand on Go Sugar, and we think the Go Sugar is possibly one of several varying styles of nickel, copper, cobalt mineralization within a corridor that we now think is 3.5 kilometers in strike. So we think the work that we've done, we understand the stratigraphy. As I said, we understand the controls. And now with the work that we've done and understanding, again, the stratigraphy, we see this signature that is now 25 times the original footprint of the Go Sugar Lake deposit. So what we're anxious to do now is just sort of step away a little bit from the historic deposit and try and find large collections of massive sulfide. That is the one thing that we're missing at Go Sugar Lake. This was in our drill hole 23008. It's a massive sulfide vein. Different than what you're seeing here is the massive sulfide breccias. So this is all telling us that these sulfides have been remobilized, and this vein has come from a source of massive sulfide. So again, having done all our homework and putting Humpty Dumpty back together again and understanding this deposit puts us in a pretty good position to make additional discoveries and hopefully discoveries of massive sulfides. And then we can start saying, we're akin to Voisey's Bay, for instance. I like to use that as an exploration model. I'm not saying that we're Voisey's Bay per se, but it does give us a pretty good exploration model to work with.
And do you want to then just, you referenced this was your first hole of Go Sugar. Can you want to, utilizing the diagrams behind us now that you don't have traffic here, which is always a nice sign to see some busy feet here, but can you just maybe just situate it for us here a little bit here and utilize these in live here?
Again, this is, and I think this is very, very important, Matthew, is, I've mentioned that historically they were drilling vertical holes, and we have defined this, what we call the container rock. This is our variable textured gabbro that has the disseminated sulfides, and it hosts the sulfide breccias from 23003. So you can see that we clearly got into one of these vertical chutes, hence the very, very thick interval that we had in 23003. But Vanessa and the team have done a wonderful job of utilizing PXRF geochemistry, using our assay geochemistry, and we now recognize that we have a very chaotic, multiple intrusive, I'm going to use the term dike, which gives you that sort of regional scale. But we know what the hanging wall rocks are, we know what the footwall rocks are, and we know what the container rock is, that is being where all the mineralization occurs. And we recognize this stratigraphy on surface a minimum of 600 meters away from the historic deposit. So this is all pristine, wide open exploration territory that hasn't really been drilled before. And what's also very interesting is we're recognizing the same style of mineralization in this ultramafic unit to the north of the historic deposit, this being a peroxenite. And in there we recognize the same metal tenors that we recognize within the historic deposit itself. This has never been explored. So when I said earlier scale, it's now time to take all this wonderful work that we've done, this understanding of the deposit, and seeing what else is out there. And as I said earlier, the one missing link is that big ovoid-like body of massive sulfides, which, when we look at some of the geochemistry that we've done, here's the historic deposit. This is nickel in soils. This is 1.5 kilometers away from the historic deposit. What we're looking at here is the 95th and 98th percentile of nickel in soils. Coincident with the nickel is copper, cobalt, magnesium, chrome, telling us that we're in the right, possibly the right, the rock package. And again, another sort of interesting thing that's come with all the work that we have done to date, Matthew, is this image up here in the top left. This was data that we accumulated when we auctioned into the property. We're looking at VTEM data that was flown in 2008. And we had some geophysical consultants take the VTEM data and come up with a lithostructural interpretation. And what they have suggested is there's a big regional shear running through our property area. There is the Goshager Lake deposit. And what's interesting now, we fast forward to our results of the soil geochemistry. The soil geochemistry is mapping this shear zone beautifully. And here's the boundaries of the interpreted shear in the upper image. So again, you have to ask yourself, what are the soils telling us? Coincident with the soils, the drone mag is showing positive magnetic features as well, which one would anticipate with ultramafic and mafic gabbroic rocks. They should have a positive mag signature. So if this is indeed more of our container rock, and if these very, very rich nickel, copper, cobalt values in the soils, is this a body of massive sulfides? This is, again, to use the term scale, it's time to see what else is available to us on this fantastic project. Saskatchewan is very, very underexplored, and we're determined to prove that the province of Saskatchewan can host world-class nickel deposits like the province of Manitoba. There's no reason why Saskatchewan can't. And on that subject, Matthew, I mean, it's always important to point out that Mall Lake nickel occurrence is 10 kilometers away from the Goshager Lake deposit. Same host rock, same style of mineralization. That suggests a common source. So there's blue sky potential at the Goshager Lake deposit, and I think that's a very, very important message as well.
No, is probably not ideal worth participating in. With this said, even if the company checks all of these boxes that we've just gone through, there are specific circumstances that should at the very least cause one pause as an investor when looking at a deal. We'll be running through 15 of these today.
Well, in the case of Globex, because of our business model, which is unlike other juniors, it's to make money, that sort of gives us a hands up. The I should, in case people don't understand what we are, we're sort of like a property bank. We have 256 projects, of which 106 are royalties. And because we have so many projects and we're diversified, which is important, we have lots of precious metals, base metals, industrial minerals, specialty metals, that we take advantage of trends. So example, if when antimony became important because China was cutting off the export of antimony, well, we have antimony projects that we picked up when nobody was interested in antimony. So the diversification gives us a leg up in the markets, because if gold is doing bad, for example, gold's gone down over $100 in the last couple of days, we have other things. We have copper, we have zinc, we have dolomite, we have talc, we have rare earths and so on. So and because the way we function is that we option off our properties to other companies. So other companies pay us to earn an interest in our projects. So they take the risk, they take the dilution. Our company's listed in 1987. We have 56 million shares out. We've never done a rollback. The reason for that is because other people are taking the risk. They're paying us to take the risk. So we have revenue. And we all know that the risks in our business are very, very high. So that risk is going on to the shoulders of others. And even if they are not successful, we still make money because they're paying us to take that risk on our behalf. So compared to, you asked the question of the risk-reward ratio, the risks are lower because we're not taking the risk with our money and we're generating revenue. The reward is better because of the fact that we're not putting the money in, but only money we're putting in is in the acquisitions and maintenance of assets. And if they're successful, then we reap the rewards of their work because we retain not only shares in their company, which they have to pay us, plus the cash payments, but also a gross metal royalty, which is a percentage of the metal or mineral, whatever it is, payable in kind or in cash. So we win in all the different facets. Even if a project goes negative, we still win because we're making money on it. So the risk-reward ratio for us is different because the standard junior company, they'll take on a project, they'll go buy a project, just choose some numbers out of the air. They spend $500,000 to buy a project. They spend $2 million on exploration. It turns up with nothing. They show it as having a value of $2.5 million on their books, which, by the way, we show everything on our books at zero value, but they show it at $2.5 million. Then they go out and raise more money to acquire another property, sell more shares, dilute their shareholders, and go through that whole process again and again. And if they're lucky and they find something, they still have to do it. They have to raise more money. So they got to dilute their shareholders again. We don't do that. It's a different model. So our risk-reward ratio is much, much different than the standard junior sector. Well, I think there's lots of ways. There's no set path that is going to be the one that leads you to nirvana. So, I mean, you saw our stock price has doubled in the last 6 months or so. So that's a reward in itself, and we expect it to go higher. But there's lots of ways to generate the just reward, if you will. For example, we have a number of silica projects. We got one that we're looking at putting into production for various uses for silica. We already are going to be doing this summer a 2,000-ton bulk sample with a major that they need it. I won't say who, but for one of their projects, they need a certain amount of silica production. So, but there's lots of things that can be done with that. We get approached by companies, for example, that want to buy our royalty portfolio. Maybe we'll do a deal with somebody, we give them our royalties, they give us shares, we pass them on to our shareholders. So there's a multiple of ways. Production, I shouldn't forget production. Mont Sorcier, an iron project up in Chibougamau, that could easily, if Cerrado get it into production, for us, could generate probably $6-7 million a year. Our partner company, the spin-out company that we did, Chibougamau, independent, could make $12-13 million a year if Cerrado get it into production. So spin-outs like that also are another way to go forward on certain types of minerals. And then there's the discovery. People can make discoveries. Emperor drilling on our Duquesne West project. They're paying us cash, they're paying us shares, they're doing work. But we have a 3% gross overriding royalty. They get it into production. Let's go, guys. So there'll be revenue stream. Sometimes it's just deals, like we sold the Francoeur project to, well, it was Humana, now it's like Nego Eagle, paying us $15 million over 5 years. Another $3 million this year, the last payment. There's lots of ways that we make money. This year we're going to have revenue probably over $5 million. And we already got in cash and shares over, well, I say over, but about $30 million in the bank already, and no debt. And we own all our properties. We own our buildings, our offices, our real estate, our vehicles, everything.
Excellent.
So it's a different model. So risk reward for us is completely, different.
It's a totally different conversation, right?
Right.
Yeah.
And the reward avenues for reward are multiple, whereas most junior companies, the avenue for reward is discovery. And we all know that the chances of discovery are 99.999% negative, right? So the opportunity presented by Globex is the history of not diluting our shareholders, the fact that we have no debt, the fact that we are diversified, we only work in democratic countries, which limits it like hell, and we make money. Simple as that.
What a thought, eh?
Crazy.
Yeah.
What is happening? It's so weird. But I like that.
I said number one, I don't start a tariff war, but we're going to win this tariff war. Right off the hop, I directed the LCBO, we're the largest purchaser of alcohol in the world, by Ontario first, and if we can't find it in Ontario, and we keep building in Ontario, we go across the country. We have 51 tariff-free agreements with countries around the world. We're going to diversify our trade. I've been asking kindly for all the retailers, and by the way, this is a massive impact, folks.
Hey, I have a 9 o'clock room booked for Matthew Mickleborough. I think someone's already here for it.
Yes, they are in room number 1.
One? Thank you.
Go straight and then to your right.
Thank you. Hey.
How are you? Hey, how are you doing?
We are making money. We're pouring gold, and I think as I was mentioning to you earlier, the bad news, the good news is the bad news is behind us. So we had a bit of a reset with the share price last fall in November, with announcing that our plan going forward for 2025 was a reduced amount of gold production at a higher cost. Obviously, not good news. I think the stock, in my opinion, overreacted a bit. I bought stock, my chairman bought stock, and so here we are today in March. We're about halfway through, a little more than halfway through the first batch for 2025. We'll have 4 batches this year. We'll produce 60,000 ounces. Guidance on cost is a little over 1,600. We won't have those numbers until a little bit later after accountants do their thing. And ultimately we want investors to make money.
Yes.
We want to make money, and we're going to generate some pretty decent cash flow this year. Over the life of the mine, we're at a $2,500 gold price. We're projecting about $150 million of free cash flow. First order of business is to pay the debt off, deliver into the hedges, but then we'll have free cash flow to do other things. So we're focused right now. I mean, obviously, the operations run by Kinross. They're doing a great job. The mill's performing fine. There's no issue with I think we've got a lot of questions on this, and I'm not sure investors always read the bottom of the whole paragraph. But the transportation of the truck transport and the issue with the bridges, it's not like it's a on or off. I mean, we just had to reduce the weight that the trucks could carry across the Chena floodplain bridge. Interestingly enough, so that reduced the effectiveness, which resulted in less ounces produced. But interestingly enough, that decision now with the Trump administration coming in, there's alignment now between the federal DOT and the acceptance of the state's transportation plan. It's called the STIP, State Transportation Plan. Now the bridges are going to get fixed. So there's money available to fix the bridges. So this will be incremental improvements in the transportation plan and the weight of the trucks that can go across the bridges. So we'll see improvement over time. It won't be like a 20% increase in the weight restriction, but we'll incrementally get that back over time. So, but yeah, that's kind of where we're at with the overall plan to deliver ounces to the Fort Knox mill. Basically on schedule and on plan for 60,000 ounces. So kind of starting with our share cap structure, which is I think unique in this space. We have 12 million shares outstanding. We're New York Stock Exchange listed. We're part of the Russell. And then we're generating, you have to sort of pick your gold price. And so if we just take sort of, something $2,800 gold price, we're generating a lot of free cash flow. I mean, it's in the order of $30–40 million of free cash flow after delivering hedges, after paying down debt, or that's what we have available to pay down debt. So, we're still generating good, strong cash flows at these gold prices, even though it's only 30%. We're only capturing 30% of that beyond the hedge, beyond delivering in the hedge. Over the life of mine, like I said before, it's about 150 at 2,500. So I have to look at the chart, but I think it's about 180, getting over 180,000 at $2,800 gold. So gold was doing well this morning, I saw. So and I think all the macro indicators of the gold is going to continue to perform well. The tariff talk and all the other stuff has just got everybody a little freaked out. It's always the thing that people end up going to, and obviously the central banks who have a huge responsibility on behalf of their country. Their central bank of Turkey, central bank of whatever, they're all buying gold because they're not sure where things are really going to end up, but they know where gold will end up.
Yeah, absolutely.
On top.
Yeah. Well, then and so to circle back to the point that I think is really compelling here is that 30–40 million free cash flow, and that is that for a variety of reasons this will be as low as it can reasonably get because of hedging, because of the moisture, and because of the trucking issues, and so you have 12 million shares. You're trading around $10 right now, which I think is a crime. It should be charged with theft to be able to buy Contango at that price. But so you give or take 120 million US market cap, and you're getting 40 million in free cash flow at the bottom, right? And so when you start to see that the forward-looking market 1, 2, 3+ year outlook, I mean at these current levels, I already consider it to be pretty darn cheaply valued, right?
Yeah.
So.
Yeah, I think it's a good entry point. Obviously I'm not happy as a shareholder because my average is a lot higher. I didn't start this company, so I didn't get cheap seat. Yeah. But I believe in it, and so invested as we built the company up from almost 4 or 5 years ago. So I mean I bought stock at $12 when it adjusted down further. I thought that was a steal. And here we are at $10, and I mean it's a bigger steal. As you said, it should be a crime.
So basically these are models that are pre-trained on existing deposit of these types of deposit, and this is what we use to make predictions. So right now you have a model that's going to help you predict mineral exploration targets for origin in gold. We have a VMS model, porphyry, Caroline, two different types of epithermal. We've got a pegmatite LCT. And again, as we hit the critical amount of information for different deposit style, we'll spit up new models, right? So basically, the algorithm is going to go look at all of the input features that it shows, try to identify the signal that's related to positive example, but also try to find the signal that's related to negative example. And then this is what we're going to use as an input to the targeting. You train on the rest of your data, and then you make a prediction, and then you compare the reality to your prediction. And that is really important to understand how well your model is doing. Most people would do that by randomly selecting points in your data, hiding them from the algorithm, and then making a prediction and testing. The way we're doing it here is a bit different, and again, that's sort of one thing that's true to geoscience that might not apply if you're outside of the geoscientific field. What we're doing here is we're separating into clusters of learning points. So the important thing to know is basically what you want to do is you want to train on this data set and test out on another area in your deposit. So basically, can I train on one zone and find another zone in my data?
So that was really Steve Blower was VP Exploration of ISO at the time. He's the chairman of COSA now. He identified a project called the Rock East that they could get off of a chemical. They managed to acquire it in 2018. Within about 3 or 4 months, they had a drill rig on site. What Andy, Steve, and Justin, all members of the COSA team, noticed in one of the old holes was that higher up in the sedimentary sandstone, it looked like they overshot something of significance. And so what they did was very first hole, the last hole of their drill program, because they were drilling down a different project called Geiger, but it's the first hole ever at the Rock East after buying it. They stepped back and hit uranium mineralization. It became the discovery hole of the Hurricane deposit, which was obviously the very first hole on the project after ISOMG acquired it. So kind of rare for that to happen. I'd say hitting with your very first hole. They drilled it out for another year or so, and then when they started working towards the west side of the property, that's where they started to hit that high grade domain, and that was really about, I think it's from February 2020. They managed to start getting that 80% intersections and all that, really kind of the highest grades you get in the world. And from that point up until 2021, the share price reacted accordingly. It went from 30 cents to $6.50, where it topped out at pre-resource, and not as strongly uranium marketed as it is now. So that was life-changing for our group to be a part of that. It was really exciting, for that technical team of Steve, Justin, Andy, to really have that discovery. And Steve's had multiple discoveries, right? He had some at Denison Mines too when he's the VP of Exploration, but this was really one where I think we were all together and be part of this discovery. And like I said, it was perfect timing. The way the ISOMG was structured, that Next Gen was about 52% ownership at the time. So when you have good results and you have that type of share structure, reacts accordingly. And
is that the highest grade deposit in Canadian and therefore world history for?
Yes, the highest grade indicated uranium resource in the world. It's 34.5% average grade. I think now over 90% of it is above 50%. So basically you're picking up a piece of it, half that is uranium.
I mean, that's an order of magnitude above what it could be or should be economic anyway. I mean, it was phenomenal discovery to be part of it. And I think, that's why we're addicted to this thing. That's why we love going and trying to do it again. We're exploring. And I think, each time we do get better and we do keep learning more. And obviously Steve brought a lot of success at Denison. I was exposed to a lot of success at Denison, and then through ISO, and now hopefully through COSA. We really managed to get, I'd say, really strong shareholders in during this round, obviously led by Denison, who came in to maintain their 19.9 on a partially diluted basis in our presence list, which is guys like myself and all of us came in to coming in for significant amounts. And so I think we did our best to offset it by that, but there was just a discussion, and we figured it would just help de-risk
And yeah, it definitely did, right? The book was quite full within a matter of hours.
I mean, $6 million, yes.
Yeah.
$6 million in a tough market. You get to, there's a lot of playroom with that money, right?
Yeah, and importantly, a majority of that was charity flow through, right? So you actually end up raising. Yeah, with we had a 1.7 delta, which is extremely high in the market right now, and so we ended up raising a majority of our financing about 40 cents. So what an intelligent.
Yeah.
And so we saw that opportunity too, and took advantage of that.
Was there a degree of, I mean, for myself as an outsider, trying to just analyze things as I can, and knowing that you're sitting on the cusp of, like you say, a potentially very exciting 12 months of exploration.
Yeah.
It was a degree of just kind of, knowing you'll attract a certain degree of warrant clippers, as always happens, just kind of rip the Band-Aid off prior to news flow. Was that part of that? Or?
Yeah, I think so. I think it was just, like I said, it was just a discussion about what would de-risk as much as possible in a market like it is right now. And so I think, if there are people that are going to sell right now, we're in a position now where we're going to have a whole bunch of catalysts. We're going to have to go back to the market again. So, we'll get through it. Going into the summer, we'd look to probably go back to Murphy Lake North. I mean, that's our plan right now. And then also try and get to Darby, but that might end up Q1 of 2026. But importantly, we're fully funded for all of that. And that's all in the budget, and we're in good shape to really have a lot of drilling this year. And I think that's the biggest thing for a company like us, right? That you went back to Ursa, Andy and the team did a phenomenal job of really upgrading that project, doing a lot of really meaningful geophysics to bring it to that drill-ready target area. These projects we got from Denison are drill-ready.
Yeah.
Discovery ready. Like, this year is just drilling. Drilling. And that's the biggest catalyst for us. And so that's why we're very excited, because we don't have to do a lot of that target generation. It's ready to go.
Well, that was going to be my follow-up question, right? Is that I was going to ask you, it's sometimes the catalysts are sometimes the most critical things the market doesn't care about, right? Like you say, advancing things to drill-ready status.
Yeah.
But it's all ready to go. And then, so you have a year of drill-based catalysts without any kind of, quote-unquote boring downtime for geotechnical work, and you got the coffers, the public purse to make it happen.
Yeah,
so
for sure.
It's pretty good runway for you guys.
Yeah, definitely exciting, and we're in good shape heading into this year, going through to 2026. So it's exciting for us.
Okay.
I was just
Oh, thank you.
That's great.